Inflation. It's a word we hear often in the news, and it seems to be on everyone's mind these days. But what does it truly mean for our world, and how does it impact our daily lives? Simply put, inflation is a rise in the general price level of goods and services in an economy over a period of time. This means that the cost of living increases as the prices of everyday items go up. When the price level rises, each unit of currency buys fewer goods and services, making it harder for people to afford what they need. Consequently, inflation reflects a reduction in the purchasing power per unit of money, a loss of real value in the medium of exchange, and unit of account within the economy. This can lead to a decrease in the standard of living for many people. Inflation is a global phenomenon affecting both developed and developing countries. No nation is immune to its effects. While a small amount of inflation can be a sign of a healthy economy, when prices rise too quickly, it can lead to economic instability and uncertainty. Understanding the causes and consequences of inflation is crucial for policymakers, businesses, and individuals alike. By grasping its impact, we can better prepare and respond to the challenges it presents. The most immediate and tangible impact of inflation is on our wallets. As the cost of living rises, the value of our money diminishes, making it harder to afford the same goods and services we once did. As prices increase for everyday necessities like food, fuel, and housing, families find themselves spending more just to maintain their standard of living. Our hard-earned money doesn't stretch as far, leading to tighter budgets and more financial stress. This erosion of purchasing power can be particularly challenging for low- and middle-income households, who often have less financial cushion to absorb these increases. They may be forced to make difficult choices between essential goods and services, cutting back on non-essentials to make ends meet. For example, in Argentina, which has been grappling with hyperinflation for years, the cost of basic foodstuffs has skyrocketed, making it a struggle for many families to put food on the table. Shelves often remain empty, and the prices of available items are beyond reach for many. Families are forced to eat simpler meals, and in some cases parents skip meals to ensure their children are fed. The situation is similar in Turkey, where soaring inflation has eroded the value of the lira, causing widespread economic hardship. The devaluation of the currency has made imported goods prohibitively expensive, affecting the daily lives of ordinary citizens. With high price tags on imported products, people are forced to reconsider their purchasing decisions, often opting for cheaper, lower-quality alternatives. Inflation doesn't just affect consumers, it also has profound implications for workers and businesses. As the cost of living rises, workers may demand higher wages to keep pace with inflation. This can lead to a wage price spiral, where rising wages further fuel inflation, creating a vicious cycle. Businesses facing higher input costs and wage pressures may be forced to raise prices, cut costs, or even lay off workers. This uncertainty can stifle investment and economic growth. In the United States, the Federal Reserve is raising interest rates to combat inflation, but this could also lead to a slowdown in economic activity. Inflation also has significant implications for the global economy, affecting various aspects of trade and currency valuation. When a country experiences higher inflation than its trading partners, its exports become more expensive, and imports become cheaper. This shift in pricing can alter the balance of trade significantly. This can lead to a decline in exports, an increase in imports, and a subsequent imbalance in trade. A widening trade deficit often follows, which can have long-term economic consequences for the country. Moreover, inflation can put downward pressure on a country's currency, leading to depreciation. As a country's currency depreciates, it loses value against other currencies. This depreciation can make imported goods more expensive, further fueling inflation and creating a vicious cycle. The interconnectedness of global trade and finance means that inflation in one part of the world can quickly have ripple effects across the globe, impacting economies far and wide. The ongoing war in Ukraine, for example, has disrupted global supply chains, causing delays and shortages. This disruption has contributed to rising food and energy prices worldwide, exacerbating inflationary pressures in many countries.